Ladies and gentlemen, something just snapped in London's silver market, and most people didn't even see it coming. Right now, huge amounts of paper wealth are evaporating before your eyes, and the mainstream media won't tell you the truth. This isn't just a market wobble, it's a warning shot, a crack in the system that could shake your savings if you're not ready. If you own silver, gold, or even cash, you need to listen carefully because what's coming next could change everything. Most people think the world of money moves in ways they can see through headlines, charts, or news alerts. They sit in front of their screens waiting for the financial experts to tell them when something is wrong and when it's safe. But that's the problem. The truth is, by the time the news hits, the damage is already done. The cracks in the system appeared weeks, months, or even years earlier, but most people were too busy trusting the headlines to notice. The market doesn't wait for confirmation. It doesn't send press releases. It moves silently, supply, signaling danger long before anyone writes about it. And if you don't learn to read those signals, you are leaving your wealth at the mercy of a system designed to favor the informed over the uninformed. Take silver, for example. You don't hear about the problems until something dramatic happens. A price spike, a sudden drop, or a snap in a major market. But the signs were there long before the alarm bells. The whispers of imbalance, the subtle shifts in supply and demand, the unusual volume movements, these are all indicators that something bigger is brewing. If you're paying attention, you can see it, but most people aren't. They wait for confirmation from the mainstream media, from financial TV shows, or from analysts who are often too slow, too biased, or too invested to give the full picture. By the time the story hits the evening news, the opportunity has passed, and sometimes the loss has already been incurred. This is where financial education becomes more than just a buzzword. It becomes survival. Understanding signals requires a different mindset. It requires the ability to look at numbers, trends, and events not as isolated incidents, but as pieces of a larger puzzle. For instance, when central banks begin to shift their gold or silver reserves, it may not make headlines immediately. When the large institutions start quietly adjusting positions in futures markets, most investors see nothing. Yet, these moves are far more significant than any news story about price fluctuations. They are early warning signs, messages encoded in market behavior for those who know how to read them. The untrained investor often ignores these signs because they feel safe with conventional wisdoms. The market is stable, the economy is growing, or experts say everything is fine. But stability is often an illusion. The truth is, every market has cycles, and the ones who survive and thrive are those who recognize the cycles before the crowd. Waiting for confirmation is a trap. By the time the crowd panics, the market has already made its move. By then, your wealth may already be at risk, and your ability to take advantage of opportunity has diminished. Opportunity and danger often come together. Every major financial event, from the collapse of currencies to sudden market corrections, started with signals that were easy to miss. The difference between those who prosper and those who suffer is awareness and action. Awareness means understanding that numbers and trends speak louder than headlines. It means recognizing that when something looks off in the market, it probably is. Action means using that awareness to adjust your strategy, protect your assets, and sometimes even take advantage of the fear of others. Take small investors, for example. They tend to wait until there's certainty, until the story is everywhere, and by that time it's too late. Smart investors, on the other hand, notice early signals and act. They understand that the market gives you hints, but never warnings in plain sight. Silver may show unusual movement in London, while mainstream media reports nothing. A sudden increase in industrial demand might not make the news, but it impacts price and supply. Watching these subtle signs allows a prepared investor to position themselves before the wave hits. But preparation is not just about spotting danger, it's about mindset. Most people treat money like a static resource. They earn it, save it, and hope it grows. But the reality is, money is fluid. It flows toward knowledge, opportunity, and those who understand risk. If you don't understand the signs of impending market danger, your money flows away from you, often invisibly, before you even notice. When the market signals danger, it is giving you a choice. Take action or accept loss. Few people act because they are conditioned to wait for confirmation. But financial intelligence is about acting on knowledge, not confirmation. Think of it this way. The market is a conversation, and every trade, every shift in demand, every sudden change in volume is a word in that conversation. Most people are deaf. They look at price charts, but don't listen. They watch news stories, but don't hear the warning. Those who succeed learn to listen. They understand that signals are not loud. They are subtle. They are often disguised as small fluctuations, irregular patterns, or shifts that seem inconsequential to the uninformed eye. But to the trained eye, these are loud and clear signs of the future. Another key point is timing. Recognizing danger before it becomes public allows you to act strategically. It allows you to protect your assets before panic sells them at a loss. It allows you to position yourself to benefit when others are forced to react emotionally. Wealth is rarely created when the market is stable and headlines are positive. Wealth is created when you understand danger before anyone else does, and you use that understanding to make informed decisions. The challenge is that most people have been taught to trust appearances. They trust what they see on the news, what their friends say, or what their advisors recommend. But appearances are deceptive. Markets move for reasons that rarely make headlines. Supply chains, industrial demand, central bank policies, futures positioning. These factors often set the stage long before anyone talks about it publicly. Those who wait for headlines are always a step behind. Those who understand the signs are always a step ahead. Finally, understanding early warning signals requires discipline and courage. It is easy to ignore subtle signs because they are inconvenient, challenging, or counterintuitive. Acting on them often requires going against popular opinion. But the history of wealth creation is filled with examples of those who saw danger first and took action while others hesitated. They didn't wait for confirmation, and they didn't rely on headlines. They relied on observation, analysis, and a willingness to act before the world agreed with them. The market is always speaking. It is always signaling danger before the news headlines do. It is up to you to learn how to listen. It is up to you to develop the courage to act when others hesitate. Financial security is not found in waiting for the media to tell you everything is fine. It is found in understanding the language of the market, recognizing the signs of danger, and using that understanding to make smart decisions. Those who master this skill protect themselves, build wealth, and turn potential crisis into opportunities. Those who don't remain vulnerable, exposed, and dependent on the very system that moves faster than they can react. The question is simple. Will you wait for the headlines, or will you learn to see what most people cannot? Will you allow your wealth to be shaped by others, or will you take control by understanding the signals before they become impossible to ignore? The choice is yours, and the consequences are real. Most people think of insurance as something you pay for and hope you never use: a car policy, a home policy, or health coverage. Precious metals are the same thing, only smarter. They are insurance against a financial system that is fragile, manipulated, and unpredictable. The problem is most people don't see it that way. They look at silver and gold and say it doesn't earn interest, or it's old-fashioned. They fail to understand that these metals have held value for thousands of years through wars, depressions, currency collapses, and financial crisis. While paper money can vanish overnight, precious metals remain. That is why they are true financial insurance. Think about it. The world's financial system is built on trust. We trust governments to manage currencies responsibly. We trust banks to safeguard our savings. We trust corporations to operate honestly. But history shows that this trust is often misplaced. Currencies collapse. Banks fail. Companies go bankrupt. When these systems fail, what you hold on paper often becomes worthless. Your bank account, your stocks, your bonds, these are not insurance. They are promises. And promises can be broken. Precious metals, on the other hand, are tangible. They cannot be printed at will. They cannot be erased by policy changes. They exist independently of human promises. And that is why they act as a safeguard against financial disaster. Silver and gold are not just investments. They are protection. They are a hedge against inflation, against currency devaluation, against economic collapse. When fiat currencies lose value, precious metals tend to rise. When fear spreads through financial markets, the price of gold and silver often jumps. This is not a coincidence. It is the natural law of supply, demand, and human behavior. People always recognize value, and when the system shakes, they turn to what has consistently held value for centuries. Most people wait too long. They buy stocks hoping for growth, but they forget that growth is never guaranteed. They trust bonds to provide stability. But bonds can be manipulated or default. They think cash is safe. But history proves that cash can be wiped out through inflation or poor monetary policy. Precious metals are different because their value is not tied to promises. It is tied to scarcity and human recognition of intrinsic worth. When the system falters, metals are the lifeboat that keeps you afloat while everything else sinks. Here's another thing people miss. Insurance is most valuable when you don't need it, or rather when you think you don't need it. Most people don't invest in insurance until disaster strikes, and by then it is often too late. Precious metals operate the same way. You hope you never face a financial collapse, but having silver or gold ensures that if disaster comes, you have a way to protect your wealth. Waiting until the market crashes or the currency implodes is a losing strategy. The wise prepare before the storm, not during it. Precious metals are also portable. Unlike real estate or large assets that are difficult to liquidate, gold and silver can be moved, stored, and transferred without much effort. They are private, tangible, and universally recognized. No matter where you go in the world, a piece of gold or silver holds value. This portability adds another layer to their insurance-like quality. They protect your wealth not only from economic instability, but also from limitations imposed by geography, politics, or regulations. Another aspect that makes precious metals true insurance is their universality. While paper assets are tied to specific systems, precious metals are global. Gold has been valued in every culture and every era. Silver has been recognized as money and a store of value across continents. Their worth transcends borders, governments, and time. That universality is rare. Very few assets have value in every economy, in every crisis, and under every monetary system. Metals do. Many people focus on short-term gains, thinking of precious metals only as a way to make money. But insurance is not about making money, it's about protection. You don't buy health insurance to get rich. You buy it so you're covered if something goes wrong. Precious metals work the same way. Their value might fluctuate in the short term, but their purpose is to preserve wealth over the long term, especially when other forms of money fail. That long-term perspective is what separates the prepared from the unprepared. Finally, precious metals teach a lesson about financial responsibility. They remind you that wealth is not just about numbers on a screen or paper statements. It is about something real that can't be destroyed by a government decision or a market panic. They encourage you to think in terms of security, preservation, and long-term planning. When you hold silver or gold, you are not gambling on a trend. You are safeguarding your life's work. You are buying protection in a world where nothing else is guaranteed. In short, precious metals are more than just commodities. They are a form of financial armor. They protect you when the system fails. They preserve wealth when paper promises crumble. They offer portability, universality, and stability in a chaotic world. And most importantly, they provide peace of mind. The moment you understand this, your approach to money changes. You begin to see wealth not as a series of speculative bets, but as a network of protections, and precious metals are at the core. To ignore them is to ignore a safety net that has been proven over millennia. To embrace them is to take control of your financial destiny in a world where control is rare. When the system falters, the insured survive. And in this case, the insurance comes in the form of silver and gold. Most people run from chaos. They avoid uncertainty, stick to what feels safe, and hope the world doesn't disrupt their lives. But here's the truth. Chaos is not something to fear. It's where opportunity hides. Every major financial opportunity in history has emerged from disorder, panic, or crisis. The crash of markets, the collapse of banks, the sudden shift of currencies. These are not just disasters. They are the moments when fortunes are created for those who can see beyond the fear. The problem is most people are conditioned to react emotionally, not strategically. When the market tumbles, headlines scream, panic spreads, and people sell out of fear. They lock in losses, abandon long-term plans, and cling to the illusion of safety. Chaos is terrifying if all you see is danger, but to those who understand money, chaos is a signal. It is an invitation. It is the world telling you that something rare, valuable, and potentially life-changing is available for those willing to act. Take a look at financial history. Every reset, every correction, every crisis has been preceded by fear and uncertainty. Stocks crash, real estate values drop, currencies weaken, and suddenly what once seemed unattainable becomes accessible. Properties that were overpriced become bargains. Assets that were hoarded by institutions become available to those who are paying attention. The rich don't wait for stability. They thrive in instability. They see what others call danger and label it opportunity. Opportunity in chaos is not luck. It is observation, preparation, and courage combined. It requires understanding that value is often hidden in places where most people dare not look. When everyone is panicking, prices fall, sentiment is negative, and risk appears high. This is the moment to step in, analyze intelligently, and act. Those who wait for the crowd to calm down often miss the chance, because by the time fear subsides, the opportunity has been snapped up by those willing to take calculated risks. One of the reasons chaos creates opportunity is that it exposes weaknesses in the system. Markets, governments, and corporations all operate under assumptions of stability. When those assumptions fail, flaws are revealed. Mispriced assets, overlooked investments, and undervalued resources become visible. but spotting them requires a mindset most people don't cultivate. A mindset that questions conventional wisdom, looks beyond appearances, and considers long-term consequences rather than short-term comfort. This is why preparation is critical. Chaos doesn't wait for you to be ready. It comes whether you like it or not. Those who prepare in advance by understanding markets, diversifying assets, holding tangible wealth like precious metals, and keeping cash or liquidity ready are positioned to take advantage when the system stumbles. Those who are unprepared, on the other hand, are swept along by fear, uncertainty, and the decisions of others. The difference between success and failure often comes down to readiness, not luck. Another key element is perspective. Most people see chaos as negative, but perspective changes everything. If a market crashes, ask yourself, what is being offered that wasn't available before? What is cheap now that was expensive yesterday? What can I acquire now that will hold value when stability returns? When viewed this way, what feels like disaster is actually a doorway. The very forces that terrify the masses are the ones that create opportunity for those willing to act. It's also worth noting that opportunity in chaos is often temporary. Markets correct themselves. Assets return to overvalued status and moments of uncertainty pass. If you hesitate or overthink, the window closes. The difference between building wealth and losing wealth is often speed and decisiveness. You don't need to be reckless. You need to be observant, informed, and willing to move while others hesitate. Chaos rewards those who act wisely, not those who wait for perfect conditions that never come. Financial independence is built on recognizing these moments. Those who rely solely on stability, guaranteed returns, or conventional advice often struggle because stability is rare and guarantees are illusions. The wealthy, on the other hand, treat chaos as part of the game. They embrace it, analyze it, and extract opportunity from it. They understand that fortune often comes to those who step forward while everyone else steps back. Finally, chaos teaches a critical lesson. Control is an illusion, but action is power. You cannot control markets, governments, or global events, but you can control your response. When the world seems unstable, your ability to act thoughtfully, quickly, and decisively is what separates success from failure. Opportunities exist in chaos, but only for those who see beyond fear, prepare ahead of time, and have the courage to make moves when others are paralyzed. In the end, chaos is not the enemy. It is the catalyst. It exposes weakness, undervalues assets, and creates openings that the unprepared will never see. The question is simple. Will you shrink from the storm, or will you step into it? Recognize opportunity and take action. The choice defines your financial future, because in every crisis, opportunity waits not for the fearful, but for the bold. So here's the truth. Nobody wants to admit the silver market in London just sent a signal, a crack in the system that could ripple across the world. You can ignore it and risk watching your wealth disappear, or you can act now, secure real assets, and protect your future. Remember, when the masses panic, the wise prepare. This isn't just another market story, it's a wake-up call. Are you ready to open your eyes and take control of your financial destiny before it's too late?